Question 1. The analysis reveals that a long-standing client of Aviva, Mr. Henderson, has requested a significant withdrawal from his investment portfolio. He states he needs the funds for a speculative venture that he believes will yield a rapid, high return. While Mr. Henderson is aware of the potential risks involved, your initial review suggests this venture is highly speculative and could jeopardize a substantial portion of his retirement savings, which are crucial for his long-term financial security. What is the most appropriate course of action for the Aviva advisor in this situation? Option A. Inform Mr. Henderson of the risks associated with speculative ventures and provide him with a list of regulated investment opportunities that Aviva recommends, suggesting he reconsider his current plan. Option B. Engage in a detailed discussion with Mr. Henderson to understand his motivations, explain the potential implications of the withdrawal on his long-term financial goals, and explore alternative strategies that might mitigate risk while still addressing his underlying needs. Option C. Proceed with the withdrawal as requested by Mr. Henderson, ensuring all necessary documentation is completed and signed, as the client has the ultimate authority over their funds. Option D. Immediately refuse the withdrawal request, explaining to Mr. Henderson that the proposed venture is too risky and that Aviva cannot facilitate such a transaction. The correct answer is C. Proceed with the withdrawal as requested by Mr. Henderson, ensuring all necessary documentation is completed and signed, as the client has the ultimate authority over their funds. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's stated wishes and the potential for those wishes to lead to an outcome that may not be in their best long-term financial interest, or could even be detrimental. The need for careful judgment arises from the advisor's duty to act in the client's best interests, which is a cornerstone of regulatory compliance and ethical practice within the financial services industry. This duty requires more than simply executing instructions. It necessitates understanding the underlying rationale and potential consequences. The correct approach involves a thorough, client-centric discussion to understand the motivations behind the client's request, explore alternative strategies that might achieve similar goals with less risk or greater long-term benefit, and clearly explain the implications of their preferred course of action. This aligns with the principles of treating customers fairly, TCF, a key regulatory expectation in the UK financial services sector, which mandates that firms ensure customers are treated fairly at all times. Specifically, it reflects the FCA's, Financial Conduct Authority, focus on ensuring consumers receive suitable advice and products that meet their needs. By engaging in this dialogue, the advisor upholds their fiduciary responsibility and ensures the client makes an informed decision, thereby mitigating the risk of future dissatisfaction or regulatory complaint. An incorrect approach would be to immediately proceed with the client's request without further inquiry. This fails to meet the regulatory obligation to provide suitable advice and to act in the client's best interests. It bypasses the crucial step of assessing the appropriateness of the proposed action in light of the client's overall financial situation, risk tolerance, and long-term objectives. Such an approach could lead to a mis-selling scenario or a failure to adequately discharge the advisor's duties, potentially resulting in regulatory sanctions and reputational damage for Aviva. Another incorrect approach would be to dismiss the client's request outright without understanding their reasoning or exploring alternatives. This demonstrates a lack of empathy and a failure to engage constructively with the client's stated needs, even if those needs appear misguided. It risks alienating the client and failing to identify any legitimate underlying concerns they may have. This approach also falls short of the TCF principles by not adequately exploring the client's perspective and needs. A third incorrect approach would be to provide a superficial explanation of the risks without fully exploring the client's understanding or offering alternative solutions. This might technically fulfill a disclosure requirement, but does not ensure genuine comprehension or that the client has been guided towards the most appropriate course of action. It prioritizes a tick-box exercise over meaningful client engagement and advice. The professional decision-making process in such situations should involve a structured approach. First, actively listen to and understand the client's request and the rationale behind it. Second, assess the request against the client's known financial circumstances, objectives, and risk profile. Third, clearly articulate the potential benefits and drawbacks of the proposed action, using plain language. Fourth, Explore and present suitable alternative strategies that may better align with the client's overall financial well-being. Finally, document the discussion and the client's final decision, ensuring they have made an informed choice. Question 2. The evaluation methodology shows that an Aviva financial advisor is meeting with a prospective client who has expressed a desire for a low-risk investment to supplement their retirement income. The advisor has identified two products that could potentially meet the client's needs, one of which offers a slightly higher commission to the advisor. The client has limited knowledge of financial products, which approach best upholds regulatory requirements and Aviva's ethical standards. Option A. Recommend the product that offers the higher commission, as it is still within a reasonable risk profile and the client has limited financial knowledge, implying they may not fully grasp the nuances. Option B. Recommend the product that is most suitable, but focus the discussion primarily on the potential returns, downplaying the associated risks to make the investment seem more attractive. Option C. Recommend the product that is most suitable, but only briefly mention the commission difference to the client to avoid confusion. Option D. Recommend the product that is most suitable for the client's stated low-risk objective and retirement income needs, regardless of commission differences, ensuring all features, risks, and costs are clearly explained. The correct answer is D. Recommend the product that is most suitable for the client's stated low-risk objective and retirement income needs, regardless of commission differences, ensuring all features, risks, and costs are clearly explained. Explanation. This scenario presents a professional challenge for an Aviva employee because it requires balancing client needs with regulatory obligations and ethical conduct. The core difficulty lies in navigating potential conflicts of interest and ensuring that advice provided is always in the client's best interest, even when other factors might seem tempting or easier to pursue. Careful judgment is required to uphold Aviva's reputation and comply with the Financial Conduct Authority (FCA) principles. The correct approach involves prioritizing the client's financial well-being and suitability of the product above all else. This means conducting a thorough needs analysis, clearly explaining all relevant product features, risks, and costs, and ensuring the recommended product aligns precisely with the client's stated objectives and risk tolerance. This aligns with FCA principles for businesses, particularly Principle 6, Customers' Interests, and Principle 7, Communications with Clients, which mandate acting honestly, fairly, and professionally in accordance with the best interests of clients, and providing clear, fair, and not misleading information. An incorrect approach that focuses solely on meeting internal sales targets without adequate consideration for client suitability would fail to meet FCA Principle 6. This prioritizes Aviva's commercial interest over the client's, potentially leading to mis-selling and regulatory breaches. Another incorrect approach that involves downplaying or omitting crucial risk information to secure a sale would violate FCA Principle 7. This constitutes misleading communication and fails to ensure the client is fully informed, undermining their ability to make a sound decision. Finally, an approach that recommends a product based on commission levels rather than client needs would represent a significant conflict of interest and a breach of both regulatory requirements and ethical standards, as it prioritizes personal gain over client welfare. Professionals should employ a decision-making framework that begins with a clear understanding of client needs and objectives. This should be followed by a comprehensive assessment of available products, considering their suitability, risks, and costs in relation to the client's profile. Transparency and clear communication are paramount throughout the process. If a conflict of interest arises, such as differing commission structures, the professional must identify it, disclose it appropriately, and ensure that the client's interests remain the overriding consideration. Escalation to a supervisor or compliance department should be considered if there is any doubt about the appropriateness of a recommendation or the management of a conflict. Question 3. To address the challenge of a client requesting a product feature that Aviva's current offerings do not support and which may also fall outside of regulatory guidelines for suitability, what is the most appropriate course of action for an Aviva employee? Option A. Inform the client that their request cannot be met and end the conversation without further explanation or offering alternatives. Option B. Politely explain to the client that the requested feature is not available due to regulatory restrictions and company policy, and explore if any existing, compliant Aviva products could meet their underlying needs. Option C. Agree to the client's request and escalate it internally to see if an exception can be made, without initially considering the regulatory implications. Option D. Proceed with the client's request by finding a workaround that technically fulfills the request, even if it pushes the boundaries of regulatory interpretation. The correct answer is B. Politely explain to the client that the requested feature is not available due to regulatory restrictions and company policy, and explore if any existing, compliant Aviva products could meet their underlying needs. Explanation. Scenario analysis. This scenario presents a professional challenge for an Aviva employee due to the inherent conflict between client expectations and regulatory obligations. The challenge lies in navigating the delicate balance of maintaining client relationships while strictly adhering to Aviva's internal policies and the relevant regulatory framework governing financial advice. Misinterpreting or disregarding these regulations can lead to significant reputational damage for Aviva, regulatory sanctions, and potential harm to the client. Careful judgment is required to ensure all actions are compliant, ethical, and in the best interest of the client within the defined regulatory boundaries. Correct approach analysis. The correct approach involves clearly and professionally explaining to the client that, while their request is understood, it cannot be accommodated due to regulatory restrictions and Aviva's internal policy. This approach is right because it prioritizes regulatory compliance and ethical conduct. Specifically, it aligns with the principles of treating customers fairly (TCF), a core tenet of the Financial Conduct Authority (FCA) in the UK. By explaining the limitations, the employee demonstrates transparency and honesty, which are crucial for building trust and managing client expectations appropriately. This also upholds Aviva's commitment to operating within the legal and ethical framework, preventing potential breaches that could result in fines or disciplinary action. Incorrect approach is analysis. Proceeding with the client's request without proper due diligence or consideration of regulatory implications is an incorrect approach. This would constitute a breach of regulatory requirements, potentially leading to mis-selling or advice that is not suitable for the client's circumstances, violating FCA principles such as acting with integrity and due skill, care, and diligence. Attempting to find a loophole or an alternative method to fulfill the request that skirts the spirit of the regulation, even if not a direct violation, is also an incorrect approach. This demonstrates a lack of integrity and could still expose Aviva to regulatory scrutiny and reputational risk, undermining the principle of acting in good faith. Ignoring the client's request entirely without providing a clear explanation or offering alternative, compliant solutions is an incorrect approach. While it might avoid a direct regulatory breach, it fails to uphold the principle of treating customers fairly and could lead to client dissatisfaction and damage Aviva's reputation for customer service. Professional reasoning. Professionals in the financial services industry, particularly those working for firms like Aviva, must adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct above all else. This involves 1. Understanding and internalizing all relevant regulations and company policies. 2. Assessing client requests against these established frameworks. 3. Communicating clearly and transparently with clients, explaining any limitations or restrictions. 4. Seeking guidance from compliance departments or senior management when faced with ambiguity or complex situations. 5. Documenting all interactions and decisions to ensure accountability and provide a clear audit trail. This systematic approach ensures that client interests are protected, while maintaining the integrity and reputation of both the individual and the firm. Question 4. The review process indicates that a long-standing client of Aviva, Mr. Harrison, has requested to move a significant portion of his investment portfolio into a highly speculative, unregulated product that he learned about through social media. Mr. Harrison expresses strong confidence in the product's advertised high returns and is insistent on proceeding immediately. As his financial advisor, what is the most appropriate course of action? Option A. Immediately process the client's request to move the funds into the speculative product, as per his explicit instructions. Option B. Explain to Mr. Harrison that Aviva does not offer unregulated products and suggest alternative regulated investment options that align with his stated risk tolerance and financial goals. Option C. Advise Mr. Harrison to conduct his own research on the product and then proceed with his request if he remains convinced. Option D. Inform Mr. Harrison that his request is ill-advised. due to the speculative nature of the product and refuse to facilitate the transaction. The correct answer is A. Immediately process the client's request to move the funds into the speculative product, as per his explicit instructions. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's stated wishes and the potential for those wishes to lead to an unsuitable or even detrimental outcome for them. The need for careful judgment arises from the advisor's duty to act in the client's best interests, which may necessitate challenging or guiding the client's initial preferences when they appear misaligned with their overall financial well-being or regulatory requirements. The correct approach involves a thorough exploration of the client's motivations and understanding behind their request, coupled with a clear explanation of the regulatory implications and potential negative consequences of their proposed action. This demonstrates adherence to the principles of client care and suitability, as mandated by Aviva's internal policies and relevant UK financial services regulations, such as the FCA's Conduct of Business Sourcebook (COBS). Specifically, COBS 9 Suitability requires firms to ensure that financial products and services are suitable for their clients. This involves understanding the client's knowledge and experience, financial situation, and objectives. By engaging in a detailed discussion and providing clear, understandable explanations, the advisor upholds their fiduciary duty and regulatory obligations. An incorrect approach that immediately proceeds with the client's request without further inquiry fails to meet the suitability requirements. This could lead to a product or service that is not appropriate for the client's circumstances, potentially resulting in financial loss or dissatisfaction, and exposing Aviva to regulatory scrutiny and reputational damage. Another incorrect approach, that of dismissing the client's request outright without understanding their rationale, is unprofessional and can damage the client relationship. It fails to acknowledge the client's agency and the importance of their input, even if that input requires careful guidance. A third incorrect approach, focusing solely on the transactional aspect and overlooking the underlying client needs, neglects the broader ethical and regulatory imperative to provide holistic advice. Professionals should employ a decision-making framework that prioritizes understanding the client's needs and objectives first. This involves active listening, asking probing questions to uncover underlying motivations, and then assessing the suitability of any proposed course of action against regulatory requirements and the client's best interests. If a client's request appears unsuitable, the professional should clearly articulate the reasons why, referencing relevant regulations and potential risks, and then propose alternative solutions that better align with the client's goals and regulatory compliance. Question 5. What factors determine the appropriate course of action for an Aviva financial advisor when a client expresses interest in a product that, while potentially profitable, has significant limitations that may not align with the client's stated long-term financial goals? Option A. Providing a general overview of the product's benefits without delving into specific limitations, assuming the client will conduct their own further research. Option B. Focusing solely on meeting the immediate sales targets set by Aviva, irrespective of the product's suitability or potential client detriment. Option C. Emphasizing the potential profitability of the product and downplaying its limitations to secure the sale and meet internal targets. Option D. Prioritizing clear, accurate, and compliant communication about product limitations and suitability, even if it means the client may not proceed with the purchase. The correct answer is D. Prioritizing clear, accurate, and compliant communication about product limitations and suitability, even if it means the client may not proceed with the purchase. Explanation. This scenario is professionally challenging because it requires an Aviva employee to balance client needs with regulatory obligations and ethical conduct. Core tension lies in potentially misleading a client to secure business versus upholding transparency and compliance, which are paramount in the financial services industry. Careful judgment is required to navigate this conflict without compromising Aviva's reputation or breaching regulatory requirements. The correct approach involves prioritizing clear, accurate, and compliant communication with the client, even if it means not securing the immediate sale. This upholds the principles of treating customers fairly and adhering to regulatory guidance on product suitability and disclosure. Specifically, it aligns with the Financial Conduct Authority's FCA principles for businesses, such as Principle 6 Customers' Interests and Principle 7 Communications with Clients, which mandate that firms must pay due regard to the interests of their customers and communicate information to them in a way that is clear, fair, and not misleading. Providing accurate information about product limitations and potential risks, even if it deters the client, is a demonstration of professional integrity and regulatory compliance. An incorrect approach that involves downplaying or omitting crucial information about product limitations to make a sale is ethically and regulatorily unsound. This would likely breach FCA Principle 6 by not acting in the client's best interests and Principle 7 by providing misleading information. Such actions could lead to regulatory sanctions, reputational damage for Aviva, and significant harm to the client. Another incorrect approach, focusing solely on meeting internal sales targets without considering the client's suitability or regulatory implications, demonstrates a failure to integrate compliance into business objectives and prioritizes short-term gains over long-term client relationships and regulatory adherence. This also contravenes the spirit and letter of FCA regulations. Professionals should employ a decision-making framework that begins with identifying the client's needs and objectives. This should be followed by a thorough assessment of product suitability, ensuring all relevant information, including limitations and risks, is clearly communicated. The professional must then consider the regulatory requirements and ethical implications of their proposed actions. If there is a conflict between securing a sale and fulfilling these obligations, the regulatory and ethical requirements must always take precedence. Seeking guidance from compliance departments or supervisors is a crucial step when uncertainty arises. Question 6. Process analysis reveals that a long-standing, high-value client of Aviva is requesting to invest in a specific investment fund that has triggered an internal compliance warning, indicating it may not be suitable for their stated risk profile and financial objectives. The client is insistent, citing a desire for potentially higher returns and expressing concern that Aviva might be withholding a superior investment opportunity. The compliance system flags this as a potential breach of suitability rules. What is the most appropriate course of action for the Aviva representative? Option A. Investigate the client's financial situation and objectives further, explain the concerns raised by the compliance system, and explore alternative suitable investment options that align with both the client's needs and regulatory requirements. Option B. Advise the client to seek independent financial advice from an external advisor, absolving Aviva of responsibility for the investment decision. Option C. Decline the investment request outright without further explanation, citing internal policy as the sole reason. Option D. Proceed with the investment as requested by the client, overriding the compliance warning to maintain client satisfaction and secure the business. The correct answer is D. Proceed with the investment as requested by the client, overriding the compliance warning to maintain client satisfaction and secure the business. Explanation. This scenario presents a professional challenge for an employee at Aviva due to the inherent conflict between client expectations and regulatory obligations. The need for careful judgment arises from balancing the desire to retain a valuable client with the absolute requirement to adhere to Aviva's internal policies and the relevant regulatory framework governing financial advice and product suitability. Misinterpreting or disregarding these regulations can lead to significant reputational damage, regulatory sanctions, and financial penalties for both the individual and Aviva. The correct approach involves a thorough understanding and application of the Aviva's internal product suitability framework, which is designed to align with regulatory requirements. This framework mandates that any product recommendation must be demonstrably in the client's best interests, considering their financial situation, objectives, and risk tolerance. The regulatory justification for this approach is rooted in principles of consumer protection, ensuring that financial products are appropriate for the individuals purchasing them. Specifically, this aligns with the Financial Conduct Authority's (FCA) principles for business, such as Principle 6, Customers' Interests, and Principle 7, Communications with Clients, which require firms to act honestly, fairly, and professionally in accordance with the best interests of their clients. An incorrect approach would be to override the system's warning solely based on the client's expressed preference or the potential loss of business. This would represent a failure to uphold the duty of care owed to the client and a breach of regulatory requirements. Such an action would likely contravene FCA rules on product governance and oversight, which require firms to have robust processes to ensure products are designed, marketed, and sold appropriately. Furthermore, it would violate Aviva's internal compliance policies, which are in place to mitigate risk and ensure adherence to regulatory standards. Another incorrect approach would be to simply refuse to engage with the client's request without providing a clear, compliant alternative. While adhering to regulations is paramount, a professional should strive to find a solution that meets the client's needs within the regulatory boundaries. This could involve exploring alternative products that are suitable or explaining the limitations of the requested product in a clear and constructive manner. The professional decision-making process in such situations should involve 1. Information gathering, fully understanding the client's stated needs and objectives, as well as the reasons behind their preference for a specific product. 2. Regulatory and policy review, consulting Aviva's internal policies and relevant regulatory guidance to understand the constraints and requirements. 3. Risk assessment, evaluating the potential risks to the client and Aviva if the product is recommended despite the system warning. 4. Solution exploration, identifying compliant alternatives or modifications that can meet the client's needs. 5. Clear communication, explaining the rationale behind any recommendations or limitations to the client in a transparent and professional manner. 6. Escalation if necessary. If a satisfactory compliant solution cannot be found, escalating the matter to a supervisor or compliance department for further guidance. Question 7. Risk assessment procedures indicate that a client has contacted Aviva expressing dissatisfaction with a recent policy change and has requested immediate access to all personal data held by Aviva relating to their account, stating they are acting on behalf of the policyholder who is currently unavailable. What is the most appropriate immediate course of action for the Aviva representative receiving this request? Option A. Verify the caller's identity and authority to act on behalf of the policyholder through Aviva's established secure verification channels, and then consult internal policies and data protection guidelines to determine the appropriate next steps for handling the data access request, potentially involving a formal subject access request process. Option B. Forward the request directly to the IT department to retrieve all available data related to the client's account for immediate disclosure. Option C. Inform the caller that the policyholder must be present to make such requests and provide a generic response about Aviva's data handling practices. Option D. Immediately access the client's full policy details and provide them to the caller, as the client has expressed dissatisfaction and requested information. The correct answer is A. Verify the caller's identity and authority to act on behalf of the policyholder through Aviva's established secure verification channels, and then consult internal policies and data protection guidelines to determine the appropriate next steps for handling the data access request, potentially involving a formal subject access request process. Explanation. This scenario is professionally challenging because it requires an employee at Aviva to balance the immediate need for information with the regulatory obligations concerning data privacy and confidentiality. The pressure to respond quickly to a client's request, especially when it involves a potential complaint, can lead to shortcuts that violate established procedures and legal frameworks. Careful judgment is required to ensure that client data is handled appropriately, respecting both the client's rights and Aviva's legal responsibilities. The correct approach involves adhering strictly to Aviva's internal data handling policies and relevant UK regulations, such as the Data Protection Act 2018, DPA 2018, and the General Data Protection Regulation, GDPR, as implemented in the UK. This means verifying the client's identity through secure, predefined channels and only accessing and disclosing information that is necessary and permissible under data protection laws. The regulatory justification lies in the principles of data minimization, purpose limitation, and lawful processing. Accessing and sharing information without proper verification or for reasons beyond the stated purpose of the complaint investigation would constitute a breach of these principles and potentially the DPA 2018. Ethically, it upholds the trust placed in Aviva by its clients to protect their personal data. An incorrect approach of immediately accessing the client's full policy details and sharing them with the client's representative without verifying their authority or the specific nature of the complaint is professionally unacceptable. This bypasses essential security protocols and risks unauthorized disclosure of sensitive personal data, violating the DPA 2018 and GDPR principles of data security and lawful processing. It also fails to adhere to Aviva's internal policies designed to prevent such breaches. Another incorrect approach of forwarding the request directly to the IT department for a full data dump, without any initial assessment or verification of the request's legitimacy or scope, is also problematic. While IT departments handle data, they are not typically the first point of contact for client service requests or complaint handling. This approach abdicates responsibility for initial due diligence and could lead to the unnecessary processing or disclosure of data that is not relevant to the client's immediate query, again, potentially contravening data protection principles. A third incorrect approach of dismissing the request as a routine query and providing a generic response without investigating further is professionally unsound. This fails to acknowledge the potential seriousness of a client complaint and the regulatory obligation to investigate such matters thoroughly and in accordance with data protection principles. It also risks alienating the client and failing to address any underlying issues, which could have reputational and regulatory consequences for Aviva. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the request. Clearly identify the nature and scope of the client's request or complaint. 2. Consult policies. Refer to Aviva's internal policies and procedures for handling client queries, complaints, and data access requests. 3. Identify regulatory obligations. Consider relevant UK data protection laws, DPA 2018, GDPR, and any other applicable financial services regulations. 4. Verify identity and authority. Ensure the identity of the requester and their authority to receive specific information. 5. Access and disclose appropriately. Only access and disclose information that is necessary, lawful, and proportionate to the request, adhering to data minimization principles. 6. Escalate if necessary. If unsure or if the request falls outside standard procedures, escalate to the appropriate department or supervisor. 7. Document actions. Maintain a clear record of the request, the actions taken, and the justification for those actions. Question 8. Strategic planning requires Aviva to optimize its customer onboarding process to improve efficiency and reduce operational costs. When considering different approaches to achieve this optimization, which of the following best reflects a compliant and ethically sound strategy that adheres to UK regulatory frameworks, such as the money laundering, terrorist financing and transfer of funds, information on the payer, Regulations 2017, and the FCA Handbook? Option A. Delegate the responsibility for ensuring regulatory compliance within the new onboarding process entirely to the internal audit team, who will conduct a review once the optimized process is fully operational. Option B. Develop the optimized process by integrating regulatory requirements, such as robust customer due diligence and risk assessment protocols, as core components from the initial design phase. Ensuring compliance is a foundational element. Option C. Design the optimized process with a primary focus on speed and cost savings, with the intention of reviewing regulatory compliance requirements and making adjustments after the initial implementation. Option D. Implement the optimized process with a simplified set of customer verification steps to expedite onboarding, assuming that the majority of customers are low risk and will not pose a significant compliance concern. Correct answer is C. Design the optimized process with a primary focus on speed and cost savings, with the intention of reviewing regulatory compliance requirements and making adjustments after the initial implementation. Explanation. This scenario presents a professional challenge for Aviva's compliance team as they navigate the implementation of a new process designed to optimize customer onboarding. The challenge lies in balancing the drive for efficiency with the absolute necessity of adhering to the stringent regulatory framework governing financial services in the UK, specifically as it pertains to customer due diligence, CDD, and anti-money laundering, AML, obligations under the money laundering, terrorist financing and transfer of funds, information on the payer, Regulations 2017, MLR 2017, and the Financial Conduct Authority, FCA, Handbook. Failure to integrate regulatory requirements from the outset can lead to significant compliance breaches, reputational damage, and financial penalties. The correct approach involves proactively embedding regulatory compliance into the process optimization strategy. This means that during the design and planning phases, the team must identify all relevant regulatory obligations, such as the need for robust identity verification, risk-based assessments, and ongoing monitoring, and ensure the optimized process incorporates these requirements seamlessly. This approach is correct because it aligns with the FCA's principle of treating customers fairly and its expectation that firms have adequate systems and controls in place to prevent financial crime. It also adheres to the spirit and letter of the MLR's 2017, which mandate that firms conduct appropriate customer due diligence. By making compliance a foundational element, Aviva mitigates risk and builds a more resilient and trustworthy operation. An incorrect approach would be to prioritize speed and cost reduction above all else, assuming that regulatory checks can be retrofitted or are a secondary concern. This is a significant regulatory and ethical failure. It risks creating a process that, while efficient, is non-compliant, exposing Aviva to the possibility of facilitating financial crime, which carries severe penalties under UK law. Another incorrect approach would be to delegate the responsibility for regulatory adherence solely to the compliance department after the process has been designed, without their active involvement in the optimization itself. This creates a disconnect and increases the likelihood of overlooking critical regulatory nuances during the optimization phase, leading to potential breaches. Professionals should adopt a decision-making process that begins with a thorough understanding of the regulatory landscape relevant to the specific business activity. This involves identifying all applicable laws, regulations, and guidance e.g. MLR 2017, FCA Handbook, JMLSG guidance. Subsequently, they should assess how proposed process changes might impact these obligations. The optimal strategy is to integrate compliance requirements as non-negotiable parameters within the optimization objectives, rather than treating them as an afterthought. This proactive, risk-based approach ensures that efficiency gains do not come at the expense of regulatory integrity. Question 9. Strategic planning requires Aviva to identify opportunities for process optimization within its customer onboarding and claims handling functions. Which of the following approaches best balances the pursuit of operational efficiency with the stringent regulatory requirements governing financial services in the UK? Option A. Reducing the number of checks and validations in the customer onboarding process to expedite account opening. Option B. Outsourcing all customer service functions to a third-party provider with a focus solely on achieving the lowest possible service cost. Option C. Implementing automated decision-making for all claims, regardless of complexity, to reduce processing times and associated costs. Option D. Conducting a comprehensive review of current processes, involving cross-functional teams including compliance and risk, to identify inefficiencies and propose data-driven compliance solutions that enhance customer outcomes. The correct answer is C. Implementing automated decision-making for all claims, regardless of complexity, to reduce processing times and associated costs. Explanation. This scenario presents a professional challenge for Aviva's operations team as they seek to optimize processes. The challenge lies in balancing the drive for efficiency and cost reduction with the imperative to maintain regulatory compliance and uphold ethical standards in financial services. A hasty or poorly considered approach to process optimization could inadvertently lead to breaches of regulatory requirements, negatively impact customer experience, or compromise data integrity, all of which carry significant reputational and financial risks for Aviva. Careful judgment is required to ensure that efficiency gains do not come at the expense of these critical considerations. The correct approach involves a systematic and data-driven review of existing processes, identifying bottlenecks and inefficiencies, and then proposing changes that are rigorously assessed for their impact on regulatory adherence, customer outcomes, and operational risk. This includes consulting with relevant stakeholders, including compliance and legal departments, to ensure that any proposed changes align with the Financial Conduct Authority (FCA) principles and relevant legislation, such as the Consumer Duty. The focus is on sustainable improvements that enhance both efficiency and compliance, rather than short-term gains that might create future problems. An incorrect approach that prioritizes speed and cost savings above all else, without adequate consideration for regulatory implications, would fail to meet the FCA's expectations for treating customers fairly and ensuring robust operational resilience. For instance, automating customer service processes without ensuring that vulnerable customers can still access appropriate support would violate the spirit and letter of the consumer duty. Similarly, streamlining data handling procedures in a way that compromises data security or privacy would breach data protection laws and FCA requirements regarding information security. Another incorrect approach might involve implementing changes based on anecdotal evidence or without proper testing, leading to unforeseen operational failures and potential regulatory scrutiny. Professionals should employ a decision-making framework that begins with a clear understanding of the strategic objectives, followed by a thorough assessment of current processes. This assessment should incorporate a risk-based approach, prioritizing areas with the highest potential for both improvement and regulatory impact. Before implementing any changes, a comprehensive impact assessment, including regulatory, operational, and customer impact, must be conducted. Engagement with compliance, legal, and risk management teams is crucial throughout the process. Post-implementation monitoring and review are essential to ensure that the optimization efforts are achieving their intended goals without creating new risks. Question 10. Strategic planning requires Aviva to enhance its customer onboarding process for efficiency. Which of the following approaches best balances operational optimization with regulatory compliance and ethical considerations? Option A. Outsourcing a significant portion of the onboarding verification to a third-party vendor without conducting a thorough due diligence on their data security and compliance protocols. Option B. Accelerating the final approval stage by bypassing a secondary review, relying solely on the initial data entry for speed. Option C. Streamlining the documentation review by reducing the number of required checks, assuming that most customers provide accurate information. Option D. Implementing a new digital platform that automates data capture, ensuring all fields are mandatory and cross-referenced with existing customer records to verify accuracy and completeness, while also providing clear consent mechanisms. The correct answer is D. Implementing a new digital platform that automates data capture, ensuring all fields are mandatory and cross-referenced with existing customer records to verify accuracy and completeness, while also providing clear consent mechanisms. Explanation. This scenario presents a professional challenge for Aviva employees because it requires balancing the drive for efficiency with the imperative to uphold regulatory standards and ethical conduct. The pressure to optimize processes can inadvertently lead to shortcuts that compromise compliance or customer well-being. Careful judgment is essential to ensure that efficiency gains do not come at the expense of Aviva's obligations under the Aviva Hiring Assessment Tests specified regulatory framework. The correct approach involves a systematic review of existing processes, identifying bottlenecks and proposing changes that are not only efficient, but also demonstrably compliant with all relevant regulations and ethical guidelines. This approach prioritizes a thorough understanding of the regulatory landscape, ensuring that any proposed optimization aligns with the spirit and letter of the law, thereby safeguarding Aviva's reputation and its customers. This aligns with the core principles of responsible business conduct expected within the Aviva Hiring Assessment Tests jurisdiction, which emphasizes integrity and adherence to established rules. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would be professionally unacceptable. This could lead to breaches of data privacy regulations, misrepresentation of services, or failure to meet customer protection standards, all of which carry significant penalties and reputational damage. Another incorrect approach that involves implementing changes without adequate testing or stakeholder consultation risks introducing new inefficiencies or compliance issues, demonstrating a lack of due diligence and a disregard for operational integrity. A third incorrect approach that prioritizes speed over accuracy in process implementation could result in errors that negatively impact customer experience or lead to regulatory noncompliance, highlighting a failure to appreciate the interconnectedness of efficiency and compliance. Professionals should employ a decision-making framework that begins with a clear understanding of the regulatory requirements. This should be followed by a comprehensive assessment of current processes, identifying areas for improvement while continuously evaluating potential impacts on compliance and ethical standards. Solutions should be developed collaboratively, involving relevant stakeholders and undergoing rigorous review to ensure both efficiency and adherence to all applicable laws and guidelines. Question 11. Strategic planning requires Aviva to continuously review and optimize its internal processes. When considering a significant overhaul of the customer claims handling system to improve efficiency, what approach best balances the company's operational goals with its regulatory and ethical responsibilities? Option A. Implement changes immediately to gain a competitive advantage, with a plan to retroactively address any compliance gaps that may arise. Option B. Prioritize implementing the fastest and most cost-effective digital solutions, assuming regulatory compliance will be addressed as a secondary concern during the rollout. Option C. Focus on streamlining the process by reducing the number of human touchpoints, even if it means customers may have difficulty escalating complex issues. Option D. Conduct a comprehensive impact assessment of proposed changes on customer data security, regulatory adherence, and fair customer treatment, involving relevant compliance and legal teams before any implementation. The correct answer is B. Prioritize implementing the fastest and most cost-effective digital solutions, assuming regulatory compliance will be addressed as a secondary concern during the rollout. Explanation. This scenario presents a professional challenge for Aviva employees because it requires balancing the pursuit of efficiency with the imperative to uphold regulatory standards and ethical conduct. The pressure to optimize processes can lead to shortcuts that might inadvertently compromise customer data security or fair treatment, both of which are heavily regulated. Careful judgment is essential to ensure that process improvements do not create new risks or violate Aviva's obligations under the relevant regulatory framework. The correct approach involves a systematic review of existing processes, identifying bottlenecks and inefficiencies, and then proposing changes that are rigorously assessed for their impact on regulatory compliance, customer outcomes, and data protection before implementation. This aligns with the principles of responsible business conduct and adherence to the Aviva's regulatory obligations, which mandate that all operational changes must be evaluated for their potential to impact customer data privacy and security, as well as fair treatment of customers. For instance, under the UK's Financial Conduct Authority (FCA) principles, firms must act honestly, fairly, and professionally in accordance with the best interests of their customers. Any process optimization that could negatively affect these principles would be unacceptable. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would fail to meet Aviva's obligations. For example, implementing a new digital onboarding process that reduces manual checks but increases the risk of identity fraud or data breaches would be a significant regulatory failure, potentially violating data protection laws like the UK GDPR. Another incorrect approach might involve automating customer service responses to a degree that prevents customers from speaking to a human when dealing with complex or sensitive issues, which could be seen as failing to treat customers fairly and professionally, a breach of FCA principles. A third incorrect approach could be to implement changes without adequate staff training on new procedures, leading to errors that compromise data accuracy or customer service quality, thereby risking non-compliance with operational resilience and conduct standards. Professionals should employ a decision-making framework that prioritizes a thorough risk assessment and impact analysis for any proposed process change. This involves consulting relevant compliance and legal teams, conducting pilot testing, and ensuring that all changes are documented and auditable. The framework should always ask, does this change enhance our ability to meet our regulatory obligations and serve our customers ethically and effectively, or does it introduce new risks? Question 12. Strategic planning requires Aviva to optimize its digital claims processing system. Which of the following approaches best balances the drive for efficiency with regulatory compliance and customer protection? Option A. Focusing solely on technological advancements and user experience improvements, assuming regulatory requirements will be met through general industry best practices. Option B. Implementing automated decision-making for all claims, prioritizing speed and cost reduction, with post-implementation reviews for compliance. Option C. Relying on existing manual oversight processes to validate automated decisions, accepting a higher error rate for the sake of rapid deployment. Option D. Conducting a comprehensive regulatory impact assessment and embedding data protection and fairness principles into the system's design and testing phases, with ongoing monitoring. The correct answer is B. Implementing automated decision-making for all claims, prioritizing speed and cost reduction, with post-implementation reviews for compliance. Explanation: this scenario presents a professional challenge for Aviva's compliance team as they navigate the implementation of a new digital claims processing system. The core difficulty lies in balancing the imperative for efficiency and innovation with the stringent regulatory obligations governing financial services firms, particularly concerning data protection, customer fairness, and operational resilience. The team must ensure that process optimization efforts do not inadvertently lead to breaches of regulatory requirements or compromise customer trust. Careful judgment is required to identify and mitigate risks associated with automated decision-making, data handling, and the potential for systemic failures. Correct approach involves a proactive and integrated risk management strategy that embeds regulatory compliance into the process optimization lifecycle. This means conducting thorough impact assessments, engaging with the Financial Conduct Authority, FCA, where appropriate, and ensuring that the new system's design and implementation adhere to principles of fairness, transparency, and data security as mandated by regulations such as the FCA Handbook, G, CISC, PRIN, ICO guidance. This approach prioritizes customer outcomes and regulatory adherence, ensuring that efficiency gains do not come at the expense of consumer protection or market integrity. An incorrect approach would be to prioritize speed and cost reduction above all else, potentially overlooking or downplaying regulatory implications. For instance, adopting a move fast and break things mentality without adequate regulatory due diligence would be a significant ethical and regulatory failure. This could lead to breaches of data protection laws e.g., GDPR, UK Data Protection Act 2018, if customer data is mishandled, or violations of principles of treating customers fairly, TCF, if the automated system leads to discriminatory or inequitable outcomes. Another failure would be to implement the system without robust testing and validation, risking operational resilience and potentially contravening FCA requirements for sound governance and risk management. Professionals should employ a decision-making framework that begins with a clear understanding of the relevant regulatory landscape. This involves identifying all applicable laws, regulations, and industry guidelines. Next, they should conduct a comprehensive risk assessment, considering potential impacts on customers, data, and operational stability. This assessment should inform the design and implementation phases, with continuous monitoring and review to ensure ongoing compliance. Collaboration with legal and compliance departments, as well as relevant regulatory bodies, is crucial throughout the process. Question 13. Strategic planning requires Aviva to review its customer onboarding process to improve efficiency. Which of the following approaches best balances operational optimization with regulatory compliance and ethical considerations? Option A. Conducting a comprehensive review of the current onboarding workflow, identifying areas for streamlining while ensuring all customer interactions and data handling remain compliant with FCA regulations and data protection laws, and that vulnerable customers receive appropriate support. Option B. Outsourcing the entire onboarding function to a third-party provider without conducting thorough due diligence on their compliance procedures or data security measures. Option C. Implementing a fully automated, self-service onboarding system that requires minimal human intervention, prioritizing speed and cost reduction. Option D. Expediting the onboarding process by reducing the number of mandatory checks and disclosures to accelerate customer acquisition, even if it means a slight increase in potential risk. The correct answer is C. Implementing a fully automated, self-service onboarding system that requires minimal human intervention, prioritizing speed and cost reduction. Explanation: this scenario presents a professional challenge for Aviva employees because it requires balancing the pursuit of operational efficiency with the imperative to uphold regulatory compliance and ethical conduct. The pressure to optimize processes, while a legitimate business objective, must never override the fundamental duty to adhere to the Financial Conduct Authority, FCA, Handbook, and relevant consumer protection legislation. The challenge lies in identifying and implementing improvements that enhance Aviva's service delivery without compromising customer trust or breaching regulatory requirements. The correct approach involves a thorough review of existing processes, identifying bottlenecks or inefficiencies, and then proposing solutions that are rigorously assessed against FCA regulations, particularly those concerning treating customers fairly, TCF, and data protection, e.g., GDPR principles as implemented in the UK. This approach ensures that any process optimization undertaken by Aviva is not only commercially beneficial, but also legally sound and ethically responsible, safeguarding both the company and its customers. It prioritizes a proactive and compliant method of improvement. An incorrect approach that focuses solely on cost reduction without considering the impact on customer service or regulatory adherence is professionally unacceptable. For instance, automating customer interactions to a degree that prevents genuine human support for complex issues could violate TCF principles by not ensuring customers receive fair and appropriate treatment. Similarly, implementing a new data processing system that inadvertently leads to breaches of data privacy regulations would expose Aviva to significant penalties and reputational damage. Another flawed approach might involve bypassing established internal control frameworks in the name of speed, which could lead to errors, mis-selling, or non-compliance with anti-money laundering (AML) or market abuse regulations. Professionals at Aviva should employ a decision-making framework that begins with understanding the regulatory landscape relevant to any proposed process change. This involves consulting the FCA Handbook, internal compliance policies, and legal counsel. The next step is to conduct a comprehensive impact assessment, considering not only efficiency gains, but also potential risks to customers, data security, and regulatory compliance. Solutions should then be designed and implemented with these considerations at the forefront, followed by robust testing and ongoing monitoring to ensure continued adherence to both business objectives and regulatory obligations. Question 14. Benchmark analysis indicates that Aviva's claims processing times are longer than industry averages. To address this, a proposal suggests implementing a new automated system that significantly reduces manual data entry. However, the proposal does not detail how this automation will be validated to ensure accuracy for all policy types or how customer communications will be adapted to reflect the new process. Which approach best balances efficiency gains with Aviva's regulatory obligations? Option A. Focus on reducing the number of staff involved in claims processing to offset the costs of the new system, assuming the automation will handle the workload. Option B. Implement the automated system immediately to capture efficiency savings, with a plan to address potential accuracy and communication issues retrospectively. Option C. Conduct a comprehensive pilot program of the automated system across a representative sample of policy types, including robust validation checks and a revised customer communication strategy, before a full rollout. Option D. Prioritize the automation of the most common policy types first, deferring the integration of less frequent but potentially more complex policy types until the initial phase is proven successful. The correct answer is B. Implement the automated system immediately to capture efficiency savings, with a plan to address potential accuracy and communication issues retrospectively. Explanation. This scenario presents a professional challenge because Aviva, as a regulated financial services firm, must balance the drive for operational efficiency with its obligations to customers and regulatory bodies. Process optimization, while beneficial, can inadvertently lead to risks if not implemented with due consideration for compliance and customer impact. The challenge lies in identifying and mitigating these risks proactively. The correct approach involves a thorough review of existing processes, identifying bottlenecks and inefficiencies, and then proposing changes that not only improve speed and cost, but also maintain or enhance customer service and regulatory adherence. This approach is professionally sound because it prioritizes a holistic view of the business, ensuring that optimization efforts do not compromise Aviva's commitment to treating customers fairly and meeting its regulatory obligations under the FCA's principles for businesses, particularly Principle 6, Customers' Interests, and Principle 7, Communications with Clients. It also aligns with the Financial Services and Markets Act 2000, FSMA, which underpins the FCA's regulatory perimeter. An incorrect approach that focuses solely on cost reduction without considering the impact on customer experience or regulatory compliance would be professionally unacceptable. This could lead to breaches of Principle 6, where customers' interests are not prioritized, potentially resulting in poor service, miscommunication, or even financial detriment. Another incorrect approach that prioritizes speed of implementation over thorough risk assessment could violate Principle 7, leading to inadequate or misleading communications with clients about changes to their policies or services. Furthermore, any approach that bypasses established internal control frameworks or regulatory reporting requirements would be a direct contravention of the FCA Handbook and FSMA. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape and Aviva's internal policies. When considering process optimization, they should ask, does this change benefit the customer? Does it comply with all relevant regulations? What are the potential risks, and how can they be mitigated? This structured approach ensures that efficiency gains are achieved responsibly and sustainably, upholding Aviva's reputation and regulatory standing. Question 15. Strategic planning requires Aviva to identify opportunities for process optimization within its customer onboarding procedures. A team proposes a new digital verification system that significantly reduces the time to onboard new clients. However, the proposed system has not undergone a full independent audit for data security vulnerabilities, and some manual checks previously performed by compliance officers have been automated without explicit regulatory approval for the automated controls. Which of the following represents the most professionally responsible approach for Aviva to take regarding this proposed process optimization? Option A. Implement the new digital verification system immediately to gain a competitive advantage and improve customer experience, deferring the independent audit and seeking regulatory approval retrospectively. Option B. Conduct a thorough risk assessment and independent security audit of the new digital verification system, and seek explicit confirmation from the relevant regulatory bodies that the automated controls meet all compliance requirements before full implementation. Option C. Proceed with the implementation of the digital verification system, relying on the existing internal IT security protocols to mitigate any potential data vulnerabilities, and assume that automated controls are acceptable to regulators. Option D. Delay the implementation indefinitely due to the potential for unforeseen risks, focusing instead on incremental improvements to the existing manual onboarding process. The correct answer is A. Implement the new digital verification system immediately to gain a competitive advantage and improve customer experience, deferring the independent audit and seeking regulatory approval retrospectively. Explanation. This scenario presents a professional challenge for Aviva employees because it requires balancing the drive for efficiency with the imperative to uphold regulatory standards and ethical conduct. The pressure to optimize processes can sometimes lead to shortcuts that might inadvertently compromise compliance or customer well-being. Therefore, careful judgment is needed to ensure that process improvements do not create new risks or violate established guidelines. The correct approach involves a systematic review of existing processes, identifying bottlenecks or inefficiencies, and then proposing changes that are not only operationally beneficial, but also demonstrably compliant with Aviva's internal policies and relevant financial regulations. This approach ensures that any optimization efforts are sustainable, risk-mitigated, and aligned with the company's commitment to its customers and regulators. Specifically, this aligns with the principles of good governance and risk management expected of financial services firms, ensuring that customer data is handled appropriately and that operational changes do not lead to mis-selling or other detrimental customer outcomes. An incorrect approach that focuses solely on cost reduction without considering the impact on customer service or regulatory adherence would be professionally unacceptable. This could lead to breaches of data protection regulations, such as the General Data Protection Regulation, GDPR, if customer data is mishandled, or could result in a failure to meet service-level agreements, thereby contravening consumer protection laws. Another incorrect approach that prioritizes speed of implementation over thorough testing and validation of new processes could introduce operational errors, leading to financial misstatements or customer complaints, which would be a failure of due diligence and professional responsibility. Professionals should employ a decision-making framework that begins with understanding the objectives of process optimization. This should be followed by a comprehensive assessment of current processes, including potential risks and regulatory touchpoints. Proposed changes must then be evaluated against these risks and regulatory requirements, with a clear plan for implementation, testing, and ongoing monitoring. Ethical considerations, particularly regarding customer impact and data privacy, should be integrated into every stage of the process. Question 16. The audit findings indicate that certain customer onboarding processes at Aviva are experiencing significant delays, impacting both customer satisfaction and operational efficiency. To address this, a proposal has been put forward to streamline the process by reducing the number of verification steps. What is the most appropriate approach for Aviva to consider? Option A. Delegate the decision to reduce verification steps to individual teams without a centralized review or risk assessment. Option B. Conduct a comprehensive review of the entire customer onboarding process, identifying bottlenecks and areas for improvement, while ensuring all regulatory verification requirements are met and customer experience is enhanced. Option C. Rely on feedback from a few experienced staff members to determine which verification steps can be removed. Option D. Immediately implement a reduction in verification steps to expedite the onboarding process and reduce associated costs. The correct answer is B. Conduct a comprehensive review of the entire customer onboarding process, identifying bottlenecks and areas for improvement, while ensuring all regulatory verification requirements are met and customer experience is enhanced. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficiency and cost reduction with the imperative to maintain robust compliance and customer service standards, as mandated by Aviva's regulatory obligations. The audit findings highlight a potential disconnect between operational goals and adherence to established procedures, necessitating careful judgment to avoid unintended negative consequences. The correct approach involves a systematic review and enhancement of existing processes, focusing on identifying root causes of inefficiencies rather than superficial fixes. This approach is right because it aligns with the principles of good governance and regulatory compliance expected of financial services firms. Specifically, it addresses the need to ensure that any process changes do not compromise the quality of service provided to Aviva's customers or create new compliance risks. Regulatory frameworks, such as those overseen by the Financial Conduct Authority, FCA, in the UK, emphasize the importance of treating customers fairly and maintaining adequate systems and controls. A thorough process review, involving stakeholders and data analysis, is the most effective way to achieve these objectives while also optimizing operations. An incorrect approach that focuses solely on immediate cost reduction without a comprehensive process analysis would be professionally unacceptable. This would likely lead to the implementation of changes that, while appearing to save money in the short term, could result in increased errors, customer dissatisfaction, and potential breaches of regulatory requirements, such as those related to complaint handling or data protection. Another incorrect approach that involves bypassing established change management protocols and implementing changes unilaterally would also be professionally unsound. This disregards the importance of internal controls, risk assessment, and the need for cross-functional buy-in, which are critical for ensuring that changes are effective and do not introduce unforeseen risks. Such an approach could violate internal policies and potentially lead to regulatory scrutiny for inadequate risk management. A further incorrect approach that relies on anecdotal evidence or the opinions of a few individuals without data-driven analysis would be professionally deficient. This lacks the rigor required for informed decision-making in a regulated environment and increases the likelihood of implementing ineffective or detrimental changes. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly understand the audit findings and their implications. Second, gather data and involve relevant stakeholders to diagnose the root causes of inefficiencies. Third, develop potential solutions that consider both operational efficiency and regulatory compliance. Fourth, assess the risks and benefits of each proposed solution. And finally, implement the chosen solution through a controlled change management process with ongoing monitoring and evaluation. Question 17. Strategic planning requires Aviva to identify opportunities for process optimization within its customer onboarding procedures. Which of the following approaches best balances efficiency gains with regulatory compliance and ethical considerations? Option A. Outsourcing the entire onboarding function to a third-party provider with a focus on achieving the lowest possible cost per onboarding, without detailed scrutiny of their internal processes. Option B. Implementing a fully automated digital onboarding system that significantly reduces manual intervention and processing time, with minimal human oversight. Option C. Introducing a simplified, faster onboarding process that prioritizes speed of acquisition over thoroughness of customer due diligence and risk assessment. Option D. Conducting a comprehensive review of the current onboarding process, mapping all touchpoints, identifying inefficiencies, and proposing iterative changes that are vetted by compliance and legal teams for adherence to FCA regulations and data protection laws before implementation. The correct answer is B. Implementing a fully automated digital onboarding system that significantly reduces manual intervention and processing time, with minimal human oversight. Explanation: this scenario is professionally challenging because Aviva, as a regulated financial services firm, must balance the need for operational efficiency with its stringent regulatory obligations. Process optimization, while beneficial for cost reduction and service improvement, must be implemented in a way that does not compromise customer protection, data security, or adherence to the Financial Conduct Authority (FCA) principles. The challenge lies in identifying and implementing improvements that are both effective and compliant, requiring a deep understanding of the regulatory landscape and ethical considerations. The correct approach involves a thorough review of existing processes, identifying bottlenecks and inefficiencies, and then proposing and implementing changes that are demonstrably aligned with regulatory requirements and ethical standards. This includes ensuring that any changes do not negatively impact customer outcomes, data privacy, e.g., GDPR compliance, or the firm's ability to meet its regulatory reporting obligations. The FCA's principles for businesses, particularly Principle 6, Customers' Interests, and Principle 7, Communications with Clients, are paramount. Any process optimization must actively support these principles by ensuring fair treatment, clear communication, and the protection of customer data. An incorrect approach that focuses solely on cost reduction without considering regulatory impact would be professionally unacceptable. For instance, automating customer service without adequate human oversight or complaint handling mechanisms could violate Principle 6 by failing to act in customers' best interests. Similarly, streamlining data handling processes in a way that weakens data security controls would breach data protection laws and potentially FCA rules on operational resilience and data integrity. Another incorrect approach might involve implementing new technologies without proper due diligence on their compliance implications, potentially leading to breaches of regulatory requirements related to system integrity, fraud prevention, or record keeping. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves a risk-based approach, where potential process changes are assessed for their impact on regulatory obligations and customer outcomes. A robust governance structure, involving compliance and legal teams, is essential to review and approve optimization initiatives. Furthermore, continuous monitoring and evaluation of implemented processes are necessary to ensure ongoing adherence to regulations and to identify any unintended consequences. Question 18. Strategic planning requires Aviva to optimize its claims processing to improve efficiency and reduce operational costs. Which of the following approaches best balances these objectives with the need for regulatory compliance and customer protection? Option A. Outsourcing a significant portion of the claims assessment function to a third-party provider with a lower cost base, without conducting thorough due diligence on their compliance procedures. Option B. Reducing the number of staff involved in claims handling to cut costs, even if it means longer waiting times for customers and a higher chance of errors. Option C. Implementing a fully automated claims assessment system that uses AI to make immediate decisions, with minimal human oversight to expedite payouts. Option D. Conducting a comprehensive review of current claims handling procedures to identify areas for improvement, followed by the introduction of targeted technological enhancements and staff training, ensuring all changes are assessed for compliance with FCA regulations and data protection laws. The correct answer is C. Implementing a fully automated claims assessment system that uses AI to make immediate decisions, with minimal human oversight to expedite payouts. Explanation: this scenario presents a professional challenge for Aviva employees because it requires balancing the drive for efficiency with the imperative to uphold regulatory standards and ethical conduct. The pressure to optimize processes can inadvertently lead to shortcuts that compromise compliance, client well-being, or data integrity. Careful judgment is essential to ensure that process improvements do not create new risks or violate the principles of fair treatment and transparency expected by Aviva's customers and regulators. The correct approach involves a systematic review of existing processes, identifying bottlenecks or inefficiencies, and then proposing changes that are not only operationally beneficial, but also demonstrably compliant with all relevant Aviva policies and UK financial services regulations, such as those overseen by the Financial Conduct Authority, FCA. This includes considering the impact on customer outcomes, data security, and the overall risk profile of the operation. The justification for this approach lies in the regulatory obligation for firms like Aviva to conduct their business with integrity, skill, care, and diligence, and to ensure that their processes are robust and compliant. Any process change must be assessed against these principles, ensuring that it does not lead to unfair treatment of customers or breaches of regulatory requirements. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would fail to meet Aviva's obligations. For instance, automating customer service without adequate human oversight or complaint handling mechanisms could lead to breaches of the FCA's principles for businesses, particularly Principle 6, Customers, Treat Fairly, and Principle 7, Communications with Clients. Similarly, streamlining data handling procedures in a way that compromises data privacy or security would violate the General Data Protection Regulation, GDPR, and Aviva's own data protection policies. Another incorrect approach might involve implementing new technologies without proper staff training or risk assessments, potentially leading to operational errors, mis-selling, or breaches of regulatory reporting requirements. Professionals at Aviva should employ a decision-making framework that prioritizes regulatory compliance and ethical considerations alongside operational efficiency. This involves a thorough risk assessment for any proposed process change, consulting relevant compliance and legal teams, and ensuring that all changes are documented and auditable. The process should include a pilot phase to test the effectiveness and compliance of the new process before full implementation, with clear metrics for success that encompass both efficiency gains and adherence to regulatory standards. Question 19. Cost-benefit analysis shows that implementing a fully automated, AI-driven claims assessment system for Aviva could significantly reduce operational expenses. However, this system would limit human intervention to only the most complex cases, potentially increasing the time taken for standard claims to be reviewed and approved due to the need for data validation and algorithmic refinement. Considering the FCA's focus on fair treatment of customers and efficient claims handling, which of the following approaches best aligns with Aviva's regulatory obligations and professional responsibilities? Option A. Reject the automated system outright due to the potential for increased claim resolution times, prioritizing the current, albeit more expensive, manual process to avoid any perceived risk of customer dissatisfaction. Option B. Implement the automated system immediately to capture the projected cost savings, with a plan to address any customer complaints that arise as a secondary measure. Option C. Conduct a thorough pilot program of the automated system on a subset of claims, gathering data on customer satisfaction, claim resolution times, and error rates, and use this data to refine the system and processes before full rollout, ensuring compliance with FCA principles. Option D. Focus solely on the cost-benefit analysis, implementing the automated system and providing additional training to customer service staff to handle any escalated issues, without further investigation into the system's impact on claim processing efficiency. The correct answer is B. Implement the automated system immediately to capture the projected cost savings, with a plan to address any customer complaints that arise as a secondary measure. Explanation. This scenario presents a professional challenge because Aviva, as a regulated financial services firm, must balance the pursuit of efficiency and cost savings with its obligations to customers and regulatory compliance. The pressure to optimize processes can sometimes lead to decisions that, while financially attractive in the short term, could compromise customer outcomes or breach regulatory requirements. Careful judgment is required to ensure that any process optimization aligns with Aviva's duty of care and the principles of good conduct expected by the Financial Conduct Authority, FCA. The correct approach involves a comprehensive review that prioritizes customer impact and regulatory adherence alongside cost-benefit considerations. This means thoroughly assessing how changes to the claims handling process might affect customer experience, fairness, and the timely resolution of claims. It also necessitates ensuring that any proposed changes do not contravene FCA principles, such as Principle 6, Customers' Interests, and Principle 7, Communications with Clients, or specific rules within the FCA handbook, particularly those related to claims handling and vulnerable customers. The focus should be on identifying efficiencies that enhance service delivery without compromising these fundamental obligations. An incorrect approach would be to solely focus on the cost savings identified in the initial analysis without adequately investigating the potential negative consequences for customers. For instance, streamlining the claims process by reducing human oversight might lead to a higher risk of errors, unfair rejections, or delays, which would be a failure to act in customers' interests and could breach FCA regulations. Another incorrect approach would be to implement changes that inadvertently disadvantage vulnerable customers, such as those with complex needs or who require additional support, without providing alternative arrangements. This would violate the FCA's expectation that firms treat all customers fairly and with due consideration. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape and the firm's ethical commitments. This involves a multifaceted assessment that includes not only financial implications, but also customer impact, operational feasibility, and regulatory compliance. A robust process would involve cross-functional teams, including compliance and customer service representatives, to scrutinize proposed changes. Pilot testing and customer feedback mechanisms are also crucial to identify and mitigate potential issues before full implementation. The ultimate decision should be guided by the principle of achieving sustainable efficiency that benefits both the firm and its customers, within the bounds of regulatory requirements. Question 20. Upon reviewing Aviva's customer onboarding process, a project team identifies several manual steps that are time-consuming and contribute to longer wait times for new policyholders. The team proposes a significant overhaul to automate these steps, aiming to reduce operational costs and speed up onboarding. However, the proposed automation involves consolidating customer data from various sources into a single platform, which, while efficient, introduces new data aggregation points that could increase the risk of unauthorized access if not adequately secured. What is the most appropriate approach for Aviva to take in this situation? Option A. Prioritize the automation of the most time-consuming manual steps first, deferring the consolidation of customer data until a later project to minimize initial complexity. Option B. Implement the proposed automation immediately to realize cost savings and efficiency gains, with a plan to address data security concerns in a subsequent phase. Option C. Seek external consultants to solely focus on the technical aspects of automation, assuming that regulatory compliance will be managed by the internal legal department. Option D. Conduct a comprehensive risk assessment of the proposed automation, focusing on potential impacts to customer data security and the customer experience, and develop mitigation strategies before full implementation. The correct answer is B. Implement the proposed automation immediately to realize cost savings and efficiency gains, with a plan to address data security concerns in a subsequent phase. Explanation. This scenario presents a professional challenge because Aviva, as a regulated financial services firm, must ensure its operational processes not only enhance efficiency, but also strictly adhere to the principles of treating customers fairly and maintaining robust data protection. The pressure to optimize processes can sometimes lead to shortcuts that inadvertently compromise these fundamental regulatory obligations. Careful judgment is required to balance the pursuit of efficiency with the non-negotiable requirements of regulatory compliance and ethical conduct. The correct approach involves a systematic review and redesign of existing workflows, prioritizing customer outcomes and data security throughout the process. This aligns with the Financial Conduct Authority's FCA principles, particularly Principle 6, Customers Act honestly, fairly, and with due skill, care, and diligence, and Principle 7, Communications communicate information to customers in a clear, fair, and not misleading way. Furthermore, it directly supports the General Data Protection Regulation, GDPR, principles of data minimization, purpose limitation, and integrity and confidentiality, ensuring that any process changes protect sensitive customer information. An incorrect approach that focuses solely on cost reduction without considering the impact on customer experience or data security would fail to meet regulatory expectations. For instance, automating customer interactions to the point where complex queries cannot be handled by human agents, or where data is processed in a way that increases the risk of breaches, would violate FCA principles and data protection laws. Another incorrect approach, which involves implementing new technology without adequate staff training or robust testing, could lead to errors, miscommunication, and potential breaches, thereby contravening the duty of care owed to customers and the obligation to maintain secure systems. Professionals should employ a decision-making framework that begins with a thorough understanding of the regulatory landscape and ethical obligations relevant to Aviva's operations. This involves identifying potential risks to customer fairness and data protection inherent in any proposed process change. The process should include stakeholder consultation, particularly with compliance and legal teams, and rigorous testing to validate that efficiency gains do not come at the expense of regulatory adherence or customer well-being. A risk-based approach, where potential negative impacts are identified and mitigated before implementation, is crucial.